So I started a company when I was 24, and we didn't have a lot of resources. I guess I took out like a $5,000 furniture loan, and then I implored my first employer, DuPont, to give me a $250,000 contract, and then I asked for like 100,000 in cash up front, and my negotiating technique was they said, we don't normally do it. And I said, well, I don't have any money. And so I can't build the software you want unless you give me the money up front. And that negotiating strategy only works once in your life. But for me, it worked. And so they wanted what I had to offer. And so they gave me the money. So we started with not that much capital. And when you don't have that much capital, you can't do anything. So we were building computer simulations based upon an existing piece of software that I had, and it was limited, but we did what we could, and we grew the company to like 750,000 a year, and then we grew it to 950,000 the next year, and we saw an opportunity to plug into a graphical interface. And the idea was give computer simulations to executives to predict the future. And the problem was it was kind of Delphic. They couldn't figure out what the assumptions were. So we thought, well, maybe we can actually create a piece of software that lets them plug in the assumptions. And of course, we couldn't afford to write it in C++, so we didn't even have the programming skills to build the software. It was like 1991 or so. So we found a product called Wings, which was like an Excel spreadsheet, but it had its own scripting language and graphical interface. It was one of the first graphical interface development tools. And we took that product and we plugged it into our simulation engine. And that friend I told you about, friend/competitor, was a former professor from MIT. And so he had the PhD and he had all the knowledge, and I was just the kid, trying to grow a company. So in his wisdom, what he said was, like everybody knows that you got to use Excel if you use a spreadsheet. You can't use Wings. Excel is the winner. And my response was, yeah, it might be the market share leader, but it doesn't have the functionality. The technology just doesn't work for me. So I can either use Excel and fail, like take the safe choice and fail, or I can try something new and succeed. And he goes, well, long term, that's not going to work. I said, well, we all know that eventually Excel will crush them. Like all my business school case studies say that. So I said, yeah, but short term, we're going to fail. So we got to do something. So we built the product with Wings, and it was a screaming success, and the company doubled. And we became a $2 million company, and we became a $4 million company, and then we became an $8 million company, and then a $16 million company. And right around the time we were a $16 million company, he was still a $1 million consultancy because he hadn't taken the risk. And he was not at risk. He had no existential threats, whereas we had a $16 million company with threats, which was Excel was going to squeeze Wings out of the business. And so the answer was we rebuilt our product on a Microsoft base. So we started using Visual Basic and Microsoft technology. And at that point, when we were 16 times bigger than that consultancy, he said, every good software engineering company that I know uses C++. They don't use Visual Basic, and so you're not going to get taken seriously. And I said, well, I have people that can figure out how to do it in Visual Basic, and they can't figure out how to do it in C++. So we did it the other way, and then we doubled to 32 million, and we doubled to 64 million, and he stayed 1 million. And at 64 million, we had this existential risk, which is we needed to code part of our software in C++. But we, of course, were 64 times bigger than we had been, and we were 4x bigger than we were when we started. So we hired a lot of people, and we started coding it in C++. And he still had a secure consulting company that was $1 million with no risk. And, and it went on like that. The next thing was we adopted, the internet, and we started building our software to run on HTML. And people said, well, like no big company uses HTML. It's a risky thing and it might not be secure or it doesn't do that. And we thought, well, we can't give the software to 20,000 people unless we try this. And so maybe we'll try to figure out the problem. So the result was initially we built it and not that many people used it. And then we built it and people used more of it. And then we built the third version and everybody used it. And then the people that hadn't built the internet version got squeezed out of business. And then then it went on. But at this point, right, the company is like 200 times bigger than the $1 million consultancy, which is still not at risk. But it's the difference between being a technology company and being a services company. Services companies don't take risks and they don't pursue architectures. Technology companies need to take risk. And of course, eventually, the mobile wave hit and we rebuilt our software to run on iOS. And then people said, well, you're crazy. Android's the winner. So we built our software to run on Android. And eventually we had software running on PC operating systems, web operating systems, Android and iOS operating systems. And then, of course, eventually the web browsers changed to Chrome and in plugins. We built something that supported plugins. And if you sign up for technology, I think you got to have this model in your head that you're a snake that's shedding its skin every 3-4 years. Or, a really good model in nature for growth under pressure is a chambered nautilus. And a chambered nautilus is this creature that grows under deep sea pressure and it builds a shell. And of course, the shape of the chambered nautilus is this spiral because the creature is rebuilding the next shell to be twice as big as the last shell and turning in on itself and is using its previous work as the structure to support the next piece of work. And so if you look at the design of a chambered nautilus, what you see is nature's solution for growth under pressure. And I think that's how technology companies work. You're just always growing. You can't abandon what you've done. But neither can you not move forward and not take risk and not branch off in a new area. So there's this very interesting dynamic dance between respect for the past and integrity and architecture versus the opportunity and the challenge of the future. And you're living in that zone in the middle.